how do we plan to fund it?
So, we still have proceeds from the IPO. That is something that, will go towards expansion. And then we are looking at internal accruals, and the promoters will also put in, more money into the company.
Ma'am, like the gentleman before me pointed out that if we are having to pay so much of the money from cash flow for taking like the center, basically we will not be able to generate cash flows to be used for.
So see, we have to obviously pay the deposit before we, start the center as well, right? But once we have people who have come on board, they will also be giving us a deposit. So that will take care of it.
Okay. So is it the case that the deposits we get from our renters would roughly offset what we are giving to our landlord?
Absolutely. Pretty much. I mean, in some cases, where we are, so we also try that wherever if there's a landlord where he's asked for a 6-month deposit, we try and, ask the client also for 6 months, but in most cases, people are comfortable with 3 months. So that is something, that part we end up taking a hit, but more or less in most of the places, even the landlord takes a 3-month rent as a deposit.
Got it, ma'am. And one question on the, like you also mentioned that depending on the type of interior solution we have, the capex can be 3,000 to 4,000 per square foot. In this, ma'am, basically this interiors, we are using some kind of vendors, or like do we have an in-house team, and can you just talk about like our own employee strength, how many employees we have and what are their capabilities?
So we get our own contractors because, we are able to optimize in terms of the pricing and quality when we are personally getting things done rather than outsourcing it. So as far as possible, we get involved in the whole process ourselves. And in terms of employee strength, so we have a sales team of about 12 people. And we have a finance team, which includes accounts and, finance and our CS, which is about 6 people. And then, of course, it's us in the management.
Right. Now, actually, you mentioned the team for execution, basically contractors. I was specifically interested in that one, like the project execution or the one that is doing this interior. Like, do we have employees or those are mostly on contract?
Those are not employees. Those are all contractors.
Got it. Ma'am, if we look at the industry itself is growing pretty fast, this managed spaces kind of industry. It's growing at some 40-50%. And the interesting thing is that this is despite the fact that, if these renters were to directly take the space on rent and do the interior themselves, the center might even be cheaper that way. So just wanted to understand from your perspective, what is driving these people to come to managed service providers like us, rather than directly going to the landlord?
See, what happens is, for any company, if they take on a center, they have to infuse that much capex. So one other issue is that in many of the premises, people want to have an office, but the floor plate is very large.
Right.
So, for example, if it's a 15 or 20,000 square foot size of an office and somebody just wants to rent out 1,000 or 2,000 square foot, no landlord is going to give it to them directly. And that's the reason why co-working spaces, have become more and more popular, because generally a lot of the prime commercial real estate landlords and developers are creating larger offices. But everybody wants to have a piece of the cake. And the only way that it's possible for them to have that cake is, to go through a co-working space or a managed office. Because it's a lot easier for, let's say, a company that is looking for 10,000 square feet of office space in a floor plan which has 30,000 square feet. And even though it may be a large company, and this I'm saying because, we have encountered these things. They can't take on the 30,000 because that is not the requirement, but they still want to be at that address. So somebody like us will come in, we'll take up 30,000 and we can bifurcate 10,000 for them, then for somebody else and for somebody else. Or, maybe just give them 10,000 and convert the balance into co-working.
Understood, ma'am. Ma'am, my last question is that can you just once recall which are the different places where we have our centers today, and roughly what is the range of the rate at which we are giving it out in that place? Like the rate at which we are giving it out?
Yeah. So we have our largest centers in Thane. There the rate is anywhere between 10 to 15,000 per seat. Then we have a managed office in Port where it's 8 to 9,000 per seat. There's a lump sum amount that comes in from there, about 9 lakh rupees per month, since that's a managed office. And then in one BKC where we have two centers, the rate is approximately 40,000 per seat. Pune is in the range of 7 to 9,000 rupees per seat.
Thank you, ma'am. All the best.
Thank you so much. Thanks, Kyle.
Thank you. The next question is from the line of Neil Behel from Nadrin Capital. Please go ahead.
Hi, ma'am. This is Neil Behel. Just wanted to understand the debt on the books you said is 5 crores. Am I right?
That's right.
So, how do you plan to expand? I know there will be equity requirement, but there'll also be a lot of debt requirement. So, the debt that you take, is it in the form of fit-out financing, whereby you go for these NBFCs who do fit-out financing, or else the landlord does the fit-out financing and then you add it in the rental cost for yourself, which is paid over, let's say, 3 to 5 years?
Right. So currently, Neil, we haven't taken any fit-out financing. We have been using the IPO proceeds and internal accruals for expansion. But going forward, definitely we have had discussions with NBFCs because, we would like to keep those options open.
Right.
Once we do
that does seem to be the more asset-light way.
Absolutely, absolutely. So once we go, we already have had some firm discussions around it with the larger NBFCs, and in fact, even the pricing is very, very attractive. So it definitely makes sense, and that is something which is on the card.
Right. Okay. So that would be the way for you to do it. All right. Also, I wanted to understand FY24, you reported 11 crores of revenue. In that, you said you had 4 centers active, right?
Yeah.
How much square foot in terms of percentage was not contributing to revenue then, who was actually set up but not contributing to revenue in this FY24?
So see, in terms of square footage, it may not be that much, but because BKC is such a prime area, the price it commands is something which is much higher than all the other places. And I think it would be difficult to kind of really pinpoint.
Right. No problem. Also, as one of the participants said that the industry is growing very fast, and we've also kind of validated that the industry is growing very fast. You said that you want to go from 2,500 seats to 5,000 to 10,000. And probably, I think the growth should continue even beyond that. Is there a thing in your mind that you are saying that, okay, I'll grow from 2,500 to 5,000 because you want to maintain your margins? Or you don't think the opportunity is there to go from 2,500 to 10,000 directly this year?
Because I would rather undercommit and over-deliver.
Right. Because the opportunity may be there to go from 2,500 to 25,000.
Absolutely. I mean, the way I see it, it could maybe be just straight away 2,500 to 10,000 seats in 1 year. But it wouldn't be fair for me to, commit to something. I would rather just act and work and do it.
Right. No, so I just wanted to have a sense for my own understanding that if a company wanted to do it, it was very much on the cards.
Absolutely. 100%.
Exactly. Yeah. So that's the feedback even I've got on the industry. That's why.
No, it's absolutely on the cards, and it's also, something which is on the action.
Okay, fine. One last question I had that, some fleeting comments I heard from the previous questions, which I had taken a note of. So I guess it's around corporate governance, if you don't mind answering. You said you have given a corporate loan to somebody. Who's this entity that you've given loan to? Is it a related party entity?
Sir, this is CS Tarun. So I would like to answer this question. So basically, this is not the related parties to whom we have given the loan. We have done our due diligence to the party for the parties before giving the loan. So there is no related parties involved in the transaction.
But then, why are we entering the business of lending? Why can't we just put it in some liquid mutual funds and
No, sir. So that is the issue. We can't keep that much amount in the liquid and nothing from. So that is better for our business only.
I mean, the moment we see an opportunity, we will be, getting the money on call and then deploying it in the business. That is something that is absolutely, we are very eager to do that.
So may I know
it's just that, like I mentioned earlier, after experiencing what happened in one BKC, where it took us, it does take 3 to 4 months if you take up a later entry. That's the kind of cash burn that happens, because by the time you fill up the place, those are the timelines, but you are obligated to pay the rent. And which is why, we want to have an anchor in place going forward for any of the properties. And God has been kind, things are moving in that direction.
I understand. I understand everything around the business side, but this giving out corporate loans, what if the money doesn't come back? What if that person defaults?
So, sir, we have done our proper due diligence. We are not giving to anyone.
Yeah, plus it's collateralized.
Right. So going forward, is this going to be a thing that as your fees increase?
No, not at all. In fact, this is just a one-off thing. I don't think going forward something like this would happen. Because with the kind of pipeline that is there, we would need every single rupee in the growth and more.
Right. Don't mind me asking the next question. It can come across as not very in good taste, but I'm just asking generally. There's a vehicle loan also, because sometimes, we see that some companies, the vehicle loans are like exorbitant amounts. There's a Rolls-Royce on the company's payroll. Like what is the amount on this vehicle loan?
It's about 60 lakh rupees.
Okay, fine. That's more of a... And what is the hike in the salaries for management that you have taken this year?
So to be honest, there's no hike. I mean, we all are pretty much, focused on creating the company, on the growth of the company. And we don't want to add that burden on the balance sheet and the cash flows until, the P&L, until we reach a certain stage.
No, I just, one of the questions around cash flow was, and you had mentioned that the salaries have been increased.
No, we have added more people. We have gotten somebody senior for sales, and we have added more junior people on the sales team. And that is something which is
on that side. Okay. It's not that the existing management has...
There's no increment. Zero increment.
Basically, it is the number of employees has risen a bit.
True. Absolutely.
Okay. And my last question, sorry. This kind of a business has very little of headquarter cost, right? May I know what kind of headquarter costs do you have currently?
Headquarter cost.
I mean, a center may have a center level profitability, but you also have a sales team and XYZ team sitting somewhere else managing all of this.
Right.
So what cost as a percentage of
So in fact,
cost is the headquarter cost?
I'll tell you, the sales staff sit out of each center. So, it's not like there's any major headquarter cost. So the staff is bifurcated. I mean, every center has, some of the salespeople sitting there. And I personally keep moving around.
Right. So your salespeople sit in these centers itself.
Correct.
And the tenants are okay with this.
No, absolutely, because they don't sit with them, right?
No, I mean some space nearby, whatever.
No. There's like a small queue, which is the difference.
Understood.
And, co-working in general has a lot of common areas, and the whole idea is everybody's working together, doing their own thing at the same time.
Understood. I mean, this is all from me. Thank you. I mean, I think you've done a great job so far.
Thank you so much. Appreciate it. Thank you so much. Thanks.
Thank you. We'll take the next question from the line of Varun Pinto from Negen Capital. Please go ahead.
Hello. Hi. Am I audible?
Yes, sir. I would request you to kindly use your handset if you're on your headphones.
Is this better?
Yes, sir. Please continue.
Yeah. So I just wanted some clarification. So this totaling our seats in Thane, Pune, Fort and BKC, we have somewhere around 1,200 seats, right? So these 1,200 seats is what was generating the 11 crores top line we did in FY24, correct?
That's right.
So the 2,400 seats that we are going to be doing, that is going to come online post the Andheri MIDC center comes online.
Correct.
So when we extrapolate the FY25 revenue to be somewhere around, like double of our FY24 revenue?
Yes, 100%.
Okay. And our EBITDA margins would go back to somewhere around 40%, right? Since we don't have...
Yes, they will.
Right. Okay. Right, ma'am. And when we open a new center, ma'am, like at what occupancy do we usually break even?
So generally we break even at about 60-65%.
60-65%. And we have about a 50% occupancy at the Mahape center, right?
That's right.
And our Andheri anchor, what kind of occupancy would that give us?
See, it's very early for me to, say something about that.
Okay. Also, ma'am, at the time of the IPO, you said that you guys are also looking for a space near Airoli. So is this Mahape center the same center?
Yeah, it's close by. It's in the vicinity. This is Mahape is also in Navi Mumbai.
Airoli, right?
Yeah, this is close to that.
Okay. I think that's it from my side. Thank you, ma'am.
Thank you.
Thank you. The next question is from the line of Kaustav Datta, an individual investor. Please go ahead.
Yeah. Am I audible?
Yes, sir, you're audible. Please proceed.
Thanks a lot. All right. My question is, again, sorry to bother you again, Kanan and Kanak, on the loan, the intercorporate loan that you had given. So if I see the balance sheet, I think non-current assets of about 430 lakhs, that is towards lease deposits. And I'm assuming this is a short-term one, right? 492.52. This includes your intercorporate loan.
Absolutely. Absolutely short.
Since it is eye-catching and so many of us have already asked this question, when do you think this will get out of the way? When do you think you'll get the money back as per contract?
This definitely won't be there on the 25 balance sheet.
Sorry? It'll be out in the 25 balance sheet. Okay.
Absolutely.
Got it. My next question is on, I mean, not too sure whether you've explored it, because I was reading an IPO document of your competitor about a managed aggregation model where you go for revenue share with the landlord. So, do you think that you can see that happening because it reduces your lease rental?
Definitely. As we speak, we are in talks for this particular model.
Okay, great. That's
definitely.
Great. All right. And can you give me a rough sense of your blended utilization across centers for FY24, and how much do you expect to perform in 25? Blended utilization.
Blended utilization, I mean, in terms of our capacity utilization?
That's correct. Yeah.
So I think, blended utilization would be to the north of 85% across centers.
Okay, great.
I mean, we are looking at 85 to 90% of it going forward.
All right. Got it. And 7.5 crores that you have end of the year in terms of cash and cash equivalents, do you think that's good enough an amount for your expansion across to other cities? Is that a fair comment?
Definitely. I mean, see, like I said, once it does reach that stage, we will definitely look at, the interior financing, the fit-out financing. That is something which is on the cards. And, the deposit, again, I said, whenever we give a deposit, we also get a deposit. It's just that there's a little bit lag of time, but that is something that even the promoters would bridge the gap.
All right. And Kanan, I think you mentioned about, sorry, your voice was muffled during that time when you were giving the seat projections. And did you mention 14,000 for FY27? Is that correct?
No. I mentioned 10,000 for FY26.
Okay.
Although that's conservative, but just rather be fair. Like I even said to the previous investor, that we would rather, under-commit and over-deliver.
All right. Got it. And my last question is more from an industry perspective, understanding the co-working space. And I was just thinking of, maybe down the line, the landlords, providers of space, basically. Do you think that they would aggressively get into co-working space instead of having, people like Kontor or Office or WeWork? Can it at any time disrupt that particular industry? Because real estate are the providers of space and they are kind of kings in this field. And my question to you is kind of attempted to answer that in your previous, remark. But I just wanted to get a sense more from you. Do you see that happening? And in a way, what is the skill set that you kind of give that the real estate can't, or the real estate landlord can't?
So, happy to answer your question. I mean, I've interacted with several landlords so far, and every landlord or every property owner is only in it for the rent and for the upside on the property. They are not in it to run, a co-working space. That is not their core business. Their core business is just real estate.
All right. No, I'm just thinking from a common sense angle, right?
No, absolutely. I mean, see, anything can happen. One really can't, discount the fact that anything can happen. But will it happen or not again is something that I really can't commit to, right?
All right.
Although with I can only talk about my experience now and, my interactions with a lot of developers who own properties, a lot of, individual investors who own properties. Their core focus is real estate. They are not in it for the operations. And
I have seen Brigade and people like that at I'm based out of Bangalore, so I've seen people in Bangalore getting into that zone. Like Brigade, they've floated a subsidiary. So my question is, if you're comfortable speaking with your landlords, it's fine. I mean, they don't want to get into business, that's fine. My question is because you're industry expert, I just wanted to...
No, absolutely. But see, this is a very relative thing, right? It's something which is extremely relative. One can't generalize.
Okay. Fine. But you feel that they would concentrate on their core rather than getting into anything else like a co-working.
Absolutely.
Okay, fine. All right, thanks. That's all from my side. Thanks, Kanan. All the best.
Thank you.
Thank you, ma'am. The next question is from the line of Simmer, an individual investor. Please go ahead.
Yeah. Hi, good afternoon, everyone. Thank you for taking up my question. So, ma'am, I have just one question in regards to your payback period. What does it look like in the tier 1 city that you're operating right now in Mumbai? And when you talk about your expansion in other cities like Hyderabad, Bangalore, and Ahmedabad, what model have you created where your payback period is lesser than the one which you have currently in Mumbai?
So I see the fact that, we are trying our level best to take up spaces where we have, an anchor client, but that totally cuts the payback period shorter. So, I mean, I don't know if that really answers your question.
What is it right now? How many months is it right now in Mumbai?
So, if you start a new center with speculative inventory, it can take anywhere between 2 to 4 months.
I'm sorry, can you repeat that again?
So if you take on a premise where there's, no client, a speculative inventory, if you take on a premise which is absolutely vacant 100%, it could take anywhere between 2 to 4 months to fill up the space.
Okay. And when you talk about your long-term contracts, wherein your lock-in period is around 3 years with a 5-year contract, what sort of clients are you catering to? Can you just give me some insights about your clients, whether they are SME clients or startup clients?
So we have a mix of SME, startups, IT companies, financial services companies, multinationals. There's a BPO as well. So, it's a mix.
Got it.
And more or less everybody's also there generally for like a 2 to 3 year kind of lease.
Got it. Would you mind if you could share that on the presentation the next time when you arrange a Concall?
Absolutely. Happy to do that. We'll take a note of that.
Thanks, sir. Yeah. Thanks, ma'am, and all the best going forward.
Thank you.
Thank you. Ma'am, there is one more participant. Can we take him?
Yeah, sure.
Okay. Ladies and gentlemen, this will be the last question for today, which is from the line of Ankur Gulati, an individual investor. Please go ahead.
Hi, Kanan. What is CapEx per seat guidance?
Hello?
What is the CapEx per seat on average?
Sorry,
Your voice is breaking.
What is the CapEx per seat on average, especially for the new upcoming centers?
So the CapEx per seat, let me just find.
Mr. Gulati, I would request you to mute your line, sir.
The CapEx per seat would be about, roughly about 90,000, 80 to 90,000.
Got it. And the 3 new centers which are coming up, there you don't have any revenue share with the landlords, right? It's a straight lease model which you have done.
No revenue share.
Perfect. Okay. All right. Thanks.
Just pure vanilla lease.
Thank you, ma'am. Ladies and gentlemen, as that was the last question for today, I would now hand the conference over to Mr. Ganesh for closing comments. Over to you, sir.
Thank you everyone for joining the conference call of Kontor Space Limited. If you have any queries, you can write us at info@kirinadvisors.com. Once again, thank you for joining the conference.
Thank you. Thank you so much. Thank you, everyone.
Thank you, members of the management. Ladies and gentlemen, on behalf of Kirin Advisors, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.